The US Congress has just introduced new crypto bills which will have an immense impact on the US crypto world. At the same time, we're seeing a new gigantic company accept cryptocurrencies as a payment and big banks shutting down the accounts of a mining company. Remember the times when crypto markets were completely unregulated and you could do pretty much everything you wanted? Well, these times are over. The US Congress has been busy pushing new crypto bills this year. But how many crypto bills has it introduced this year? 5? 7? In fact, a lot more. At the same time, more and more companies are getting involved with Bitcoin and Company. Stick until the end of this video to find out all about the latest news which will determine crypto's future in the US. So far, in 2021, 18 pieces of legislation relating to blockchain and cryptocurrencies have been introduced in the United States Congress, indicating that lawmakers are pushing for greater legislative clarification on crypto assets. Jason Brett, a former director of the Federal Deposit Insurance Corporation, published an analysis on August 22 detailing how the current 117th Congress is departing from its predecessor by focusing on decentralized assets rather than private stablecoins such as Facebook's Diem project, formerly known as Libra, as a means of achieving fiscal sustainability. The Digital Asset Market Structure and Investor Protection Act, which was introduced in July, aims to distinguish between digital assets and digital asset securities by establishing different statutory definitions for each. The law, which has not yet been passed by Congress, would require that digital asset securities fall under the jurisdiction of the Securities and Exchange Commission, aka the SEC, with the Commodity Futures Trading Commissions, aka CFTC, being in charge of overseeing digital assets. According to Brett, the Eliminate Barriers to Innovation Act has made the most progress out of all congressional digital asset ideas since it was first introduced in March of this year. The bill seeks to establish a joint task force to assist the SEC and the CFTC in their effort to collaborate on the regulation of the blockchain and cryptocurrency sectors. According to the report, Congress and the House of Representatives have already passed the legislation, which is now awaiting approval by the United States Senate. In light of last-minute changes to the bipartisan infrastructure agreement made in July, including a broad definition of brokers, assets that threaten to impose stringent counterparty reporting requirements on network validators and software developers, not all congressional digital asset bills have met with widespread approval from the industry. According to TBEN Chief Counsel Zachary Kelman, the ambiguous phrasing of the political game infrastructure bill shells, in which politicians seek to raise taxes without stating how the money would be collected, is an example of a shell. Currently, the measure is being considered by the House of Representatives, where it is unlikely to be voted on before the end of the calendar year. Congressman Tom Emmer has been one of the most active members of Congress in the digital asset field this year, having introduced 3 pieces of legislation. For example, one of Emmer's proposals is the Blockchain Regulatory Certainty Act, which would exclude blockchain service providers who have no control over tokens from the requirements for money transmitter license and registration. In July, he introduced the Security Clarity Act, which would reduce regulatory requirements for blockchain-based technology. And in May, he reintroduced the Safe Harbor for Taxpayers with Forked Assets Act, which would provide a safe harbor for taxpayers who have forked assets in their accounts. What is your opinion about all these crypto bills? Let us know in the comments section down below. The crypto regulation might sound scary at first, but it actually might be quite helpful for the crypto markets since it makes them more attractive for institutional investors. Actually, this exact effect can be witnessed once again right now. The latest company to be brilliant enough to accept Bitcoin as a payment is the second largest U.S. mortgage lender, United Wholesale Mortgage. Beginning later this year, home buyers in the United States will be able to pay for their mortgages using Bitcoin instead of traditional bank transfers. Earlier this week, United Wholesale Mortgage announced that it will start accepting cryptocurrency as payment for home loans, marking a first for the nation's mortgage industry. The company's CEO, Matt Ishbia, stated the following: "We've evaluated the feasibility and we're looking forward to being the first mortgage company in America to accept cryptocurrency to satisfy mortgage payments. That's something that we've been working on, and we're excited that hopefully in Q3 we can actually execute on that before anyone in the country because we are a leader in technology and innovation." The Michigan-based mortgage firm wants to begin accepting Bitcoin in the near future, though it is also exploring Ether and other cryptocurrencies as well. As Ishbia said in a tweet from the company's official account, "We are evaluating the feasibility and requirements in order to accept cryptocurrency to satisfy mortgage payments." UWM is the country's second biggest mortgage lender, behind only Quicken, a Detroit-based lending juggernaut owned by Rocket Companies, which is the country's largest. It does all of its business through wholesale channels, which means it employs a large number of brokers that connect clients with mortgages. Will you start paying for your mortgage with BTC now? I definitely will. But the news regarding big companies and Bitcoin doesn't stop there. What is the first bank whose name comes to mind in regards to BTC? Probably JP Morgan. According to reports, JP Morgan Chase, a U.S. financial institution, has halted all account activity of Compass Mining, a Delaware-based Bitcoin mining business. During a recent conference call, Whit Gibbs, CEO of Compass Mining, presented the facts. Shout out to Chase for shutting down Compass Mining's accounts for doing our part to replace the old guard with self-sovereign, forward-looking hard money supporters. Get behind Bitcoin or get out of our way. Compass Mining is a company that specializes in the provision of Bitcoin mining rigs and hardware hosting services for customers. Individual clients are permitted to mine using the company's own infrastructure under the pretense of increasing the hash rate and the overall performance of the Bitcoin network. Prior to this, as you probably know, JP Morgan has proven its commitment to the cryptocurrency business, including employing blockchain specialists and giving access to high net worth people as well as crypto funds. On August 6th, JP Morgan gave access to 6 cryptocurrency funds within 3 weeks, in an effort to provide consumers with exposure to the cryptocurrency market. The upshot of this action is that traditional investors are now aware of the existence of a Stone Ridge Bitcoin Strategy Fund, which intends to strategize around Bitcoin futures as well as direct and indirect Bitcoin investments. Mary Callahan Eardus, Director of Asset and Wealth Management at JP Morgan, stressed the need of meeting the demand for cryptocurrency investments in July on a conference call. "A lot of our clients say it's an asset class and I want to invest, and our job is to help them put their money where they want to invest," she commented. What do you think about this latest crypto news? Do you think they'll help crypto to continue rising in the future? Let us know in that comment section. This brings us to an end of today's video. Hit like if you believe in the future of the crypto market, and don't forget to subscribe to our channel so that you don't miss any of our updates regarding all of your favorite cryptocurrencies. Also, watch the 2 videos that are on your screen right now, because trust me, you don't want to miss out on that information. Have a nice day, and I'll see you in the next video.